Thanks to the speakers, the organizers for inviting me. We already changed the title from what you see in the program. And in that vein, this is very preliminary work. There's no paper. It's a little bit less polished, but it's mostly just so you sort of see what we're thinking about, and some of the results are unlikely to change. So this is joint work with Nitin, who's standing in the back in a purple shirt. He's a postdoc here and has really done all of the work. I just get to take credit for it. And let me provide a little bit of background. Big green button. Great, thanks. So we're looking at the context of personal data privacy in low and middle income countries. And as you've sort of gotten the sense from some of the talks, and probably are aware, there has been widespread proliferation of mobile devices in low and middle income countries, as well as globally. But not just mobile phones, you also see large numbers of mobile internet users, as well as a lot of the services that are built on top of the mobile network. In particular, mobile financial services. You can see numbers here for mobile money. These are from the most recent GSMA report. 750 million registered mobile money users in sub-Saharan Africa. And then increasingly you see more sophisticated products being built on top of this ecosystem. But what I'm going to talk about is the sort of data that's being generated by this ecosystem. And so as you have billions of people using these devices, they're generating trillions of data points each day. And these are two animations that my group has made using data on the left from Rwanda, on the right from Afghanistan, just illustrating what some of the underlying data looks like. On the left, we're looking at one person's location data as observed by a mobile phone company, the call detail records for those of you that are familiar with these sort of data. And you can just sort of see the movement patterns of this person, the red dot going back and forth. On the right, this is data from Afghanistan, where we're just looking at the structure of social networks as evident in what people are calling what people from and to what regions. And so when you have this very rich data, it's also enabling really impressive products and innovations. So I'm going to focus for today just on two examples that will also show you some empirical results from a little bit later. One probably most relevant to this group is this nascent ecosystem of digital loans or instant loans, where the basic idea is that if you as an operator or financial service provider, Matt was speaking from branch yesterday, have access to data from smartphones or even from feature phones, the sort of data that you saw on the previous slide, you can use that data to predict a lot of things very accurately. And in the case of these consumer credit applications, you can predict fairly accurately whether or not someone is going to repay their loan. So one of the earlier speakers talked about this also, but this is just from information about the sort of people you're calling in text messaging, no more sophisticated information about how you're using your phone. But what you see empirically is that things like people who are more central in their social networks or more likely to repay their loans. And what this allows you to do is to then make loan eligibility decisions for large numbers of people who don't have formal financial histories. And so this is what Mshwari and Branch and Tala, how they started out. And in practice, what you see is very widespread adoption. So this statistic is now a few years old, but at the time, the last time I saw a reliable statistic, this was a survey data nationally representative in Kenya that suggested that 27% of adults had an outstanding loan from one of these companies that was making the loan eligibility decision based on information they observed about how the person was using their phone, not a formal financial history. So that's one example. Another example, this is some work I've done in the past few years, is very similar in terms of the technical approach, but what we're asking in this case, or showing in this case, is that the same machine learning algorithms, when applied to the mobile phone metadata, can be used to predict someone's socioeconomic status. And in particular, whether or not they're below international poverty lines. And so this project in Togo done in collaboration with the government there, and this NGO Give Directly, used these predictions to identify people during the pandemic that were most in need of cash transfers. And so about 150,000 people in Togo got cash transfers where the eligibility decision was made based on metadata on how that person had been using their phone in the 6 months prior to the launch of this program. Okay, so these are examples of how, those flashy video data can be used to actually enable real world products and services. Of course, and Catherine mentioned this also, but the data are also very sensitive, and they can reveal very private information about the users and the people generating those data. So in the research literature and also in the popular press, you see examples, although Catherine's numbers notwithstanding, that it can be used to predict things like age, gender, occupation, marital status, sexual orientation, and so on and so forth. A lot of things that you might not necessarily want any person to have access to, or that you have not disclosed. And so this is from a New York Times article that came out a few years ago, and they were just highlighting some of the things you can observe in the data just on the location traces of people. And so on the left, this is like a really cool, like one of those interactive New York Times articles. They observe that Mrs. Magrin's location data shows other often visited locations, including the gym and Weight Watchers. And on the right, they track this phone and see that it arrived at Planned Parenthood in New Jersey at approximately 12:45 p.m., entered the clinic from the western entrance, stayed for 2 hours, and went home. And so there should be sort of red flags going off in the idea that lots of people might have access to this quote unquote anonymized data. And in the research literature, what you see, and this bar graph is not, I'll just talk you through it, is that if you just have 2 unique data points from a data set for a given individual, you can re-identify someone with 50% probability. And by the time you get to 5 data points, you're at like 95% probability. And so these are things like, when I say data points, it just means this particular device was located at this particular tower at this particular time. There aren't that many devices that follow that same pattern. So Nitin uses the example, like, I don't think there's another device that was within like 100 meters of my home where the tower is, and 100 meters of this location at the 2 times when I use my phone. And so therefore that's what I mean by re-identification. Okay, so that's all the background. And what are we doing? So our work is trying to push on 2 fronts. The first is more formal and technical, and all you're going to see of that is this figure. But the idea is to develop computational algorithms that can take that raw data that has all of the privacy concerns attached to it and process it and convert it into a privatized version of the data. For the sake of this talk, you can think of it as simple as like adding noise to the data, but it's a little bit more sophisticated. And so that's easy, but there's 2 key features that we want. The first is we want to be able to provide guarantees, like formal mathematical guarantees, that you can't re-engineer the raw data from the privatized version. But that's also easy in theory, because I could just replace the original data with a random matrix, and there's no way you could get back to the raw data. But the problem is the random matrix isn't really useful for any of the downstream applications. So the idea is to privatize the data in a way that when you then apply machine learning algorithms to this, you can still have accurate credit scores or still accurately target cash transfers to poor people instead of to wealthier people. So that's the first half of this project. The second half is then trying to, along the lines of Jan's talk, actually, and to a certain extent, Catherine's, characterize the real world trade-offs that occur when you follow that green arrow, right? You can't just privatize data for free. I mean, you can, but typically it comes at the expense of the fidelity or the accuracy of the downstream machine learning task. And so I have just 2 slides on results to give you a taste of what it looks like. And so what this is doing is it's contrasting 4 different approaches to thinking about privatizing data, and in 2 applications. So this is using data from the real world humanitarian program in Togo on the left, and this is using data from a financial service provider in Nigeria where we have access to the raw data from subscribers, as well as the lending decisions and default, whether or not each of the subscribers, the customers defaulted. And so the green bar on both of these figures is showing you sort of the baseline or naive accuracy of the machine learning algorithm if you haven't done any privatization. If you just take the raw data and all of the privacy concerns attached with it and use that. The red bars are showing two fairly common industry standard approaches to privacy, differential privacy and k-anonymity. And what you see is that you're taking a pretty big hit in terms of accuracy. We can sort of quantify this more meaningfully if we want to, but I won't today. But just looking at the accuracy of the actual predictions, a 5% drop actually is very significant when you're thinking about the implications for a cash transfer program based on those predictions. And then on the right is this targeted differential privacy algorithm that we've developed. And I guess two things to note. First of all, as I mentioned, any of these are doing worse than this, and then second, that relative to the sort of industry standards, this particular approach to privatization, which is really focused on these sort of applications where you need to target individual subscribers, is working much better. And let me skip these callouts, but it comes at a cost. And so a lot of the work we're doing now is to try and quantify this cost in a way that's a little bit more intelligible to policymakers and decision makers. So, and importantly, in the background behind this algorithm, there's sort of like a tuning parameter, a knob where you can ratchet up or ratchet down the amount of privacy you inject when you're going from that original data matrix to the privatized version of the data matrix. And so what we do is we have a few different threat models, to basically pose the scenarios that we'd be worried about someone doing, that we'd be worried about if someone got a hold of the data. Right, so the idea we want to enable, stepping back a minute, we want to enable a scenario where a mobile phone company or a financial service provider could take their raw data, privatize it, and then make it available to the public. Because we want to be able to provide guarantees over what sort of inferences could then be drawn about the original data from the publicly released version. Okay, and so we run through a few in the paper. I'm just going to talk about the singling out attack, which is the sort of the intuition behind the attack I was talking about earlier. The idea that someone could potentially re-identify a given individual from that data set. In other words, could take the data set that was released and say, oh, hey, this is Ben Faber, and this is Paul Gertler, row 36 and row 4000. We want to make sure that we can prove that that can't happen. And so let me just sort of skip this and point you to the results. So the idea here is this is using data from that Togo cash transfer program use case, where on the x-axis, I'm showing you what happens as you ratchet up that tuning parameter to increase privacy up until the point where you're essentially providing differential privacy. And then the green point over here is the baseline where you're not doing anything to provide privacy guarantees. And so a lot of the interesting nuance here comes in the shape of these Pareto frontiers, because what we see in general is that you can actually add quite a bit of privacy at very little cost. But then towards the end, when you get to really, really ironclad privacy guarantees, that's when you start to see really fast increases in the loss. And so I didn't say this, but the y-axis, higher is worse, right? This is showing the additional exclusion errors if you were running a nationwide anti-poverty program. So Togo has about 8 million people. The program in question was targeting the bottom quartile. And so, by the time you're at differential privacy, you're adding about 200,000 more exclusion errors, meaning people who are in fact poor, but the algorithm mistakenly infers are non-poor and therefore wouldn't receive benefits. And so this is the y-axis is maybe a little bit misleading, because even this particular algorithm, there are exclusion errors. And I don't know if you remember what the baseline number was, but what you're seeing is, increasing by over, actually, I think I have it here. Well, it's not here, but it's increasing significantly. I want to say about like 80% relative to the original exclusion errors. Okay, so I'll summarize now. I think hopefully the idea is clear that big data is enabling a bunch of powerful new applications in LMICs, but there are these concomitant privacy risks. The set of technologies that are out there are really poorly suited to these sort of machine learning applications that are built on private data. And so this new approach to targeted differential privacy, if you guys have a better name for it, we're still taking suggestions, but gives policymakers more granular control over that privacy tuning parameter. in the project, we're trying to characterize these trade-offs. And then I think the broader point of this research agenda is to try and make these privacy trade-offs more legible to policymakers. So in the last 30 seconds, I mean, this is motivated by conversations with the team we were working with in Togo, where they were saying, well, look, we really want to take this approach and scale it up, but we're getting a lot of pushback because we have to get, you know, the raw data from the mobile phone companies. Civil society is pushing back. Some of the funders, the multilateral organizations funding the program, objected to that. And so it was a very either-or decision at that point. It was like, either we're going to scrap this program and not use phone data and machine learning, or we're going to do that, but have all of these privacy concerns that are attached for it. And this is trying to chart out like a middle ground or a set of options in between, where a policymaker could say, okay, well, I'm willing to eat this particular privacy risk if it comes at this benefit to reducing exclusion errors for the overall program. Okay, I will stop there and hand it back to the moderator. Thanks.